Inflation can silently erode the value of your retirement savings, and if you're in or near retirement, it can feel like a constant threat to your financial security. It's crucial to adjust your retirement investment portfolio to account for inflation. Let's talk about how you can do that effectively, so you're not left scrambling in the future. Right off the bat, the first thing you need to know is that keeping everything in cash or low interest savings accounts isn't enough. While cash feels safe, inflation will eat away at its value year after year, meaning you'll have less purchasing power when you actually need it. One way to protect your portfolio from inflation is to shift a portion of your savings into assets that have historically outpaced inflation. Stocks, particularly those in sectors like technology and healthcare, tend to grow faster than inflation over time. But there's a catch. Stocks can be volatile, and when you're getting close to retirement, you can't afford to take on too much risk. So you have to balance this with more stable investments. That's where bonds come in. Long-term government and corporate bonds offer a way to generate income while still being relatively stable. However, the challenge with bonds is that when inflation rises, bond yields can be low and their real returns can diminish. So, how do we overcome this? Well, one strategy is to consider inflation-protected securities, like Treasury inflation-protected securities, TIPS. These bonds are designed specifically to keep up with inflation, and they can help provide that safety net without sacrificing returns. However, if you want a strategy that can actually preserve and grow your wealth over time, especially with inflation making traditional investment methods more uncertain, you need to consider gold. Gold has been used for centuries as a hedge against inflation. It's a tangible asset that holds its value and often rises during inflationary periods. In fact, many investors today are opening gold IRAs to protect their wealth from inflation, and thousands of Americans are choosing to make the switch. If you're serious about protecting your wealth in the next 2 weeks, click the first link in the description to get your free gold IRA guide. This guide is tailored to help you navigate the best options for diversifying your portfolio, especially if you have more than $100K or even up to $5 million in savings. Gold IRAs are an excellent way to preserve your wealth for the long term and can provide stability when inflation rears its ugly head. Next up, let's talk about real estate. Real estate is another good option for inflation protection. Over time, property values and rents tend to increase with inflation. If you're considering adding real estate to your portfolio, look into real estate investment trusts, REITs. These allow you to gain exposure to real estate markets without directly owning property. It's a great way to tap into this growth with less hassle. But again, when considering all these options, don't forget the power of a gold IRA. Compared to traditional investments like stocks or bonds, a gold IRA offers more stability in times of economic uncertainty. It's an easy and straightforward way for retirees to protect their wealth, especially as inflation becomes a bigger concern. To summarize, if you want to protect your retirement savings from inflation, you need to diversify. Consider adding stocks for growth, bonds for stability, inflation-protected securities for a hedge against inflation, and gold for long-term security. And for American retirees with 100K plus in their IRA or 401K or even 5Men plus in savings, a gold IRA can be the key to keeping your wealth intact despite inflation. If you haven't yet, click the first link in the description to get your free gold IRA guide today and discover why thousands of Americans are choosing to protect their wealth. Don't wait, because inflation is already here and it's not going anywhere.